Hello, everyone, and welcome to the next hour with the Partners Group. Today, we're going to be discussing the topic of paid family leave. Talking right now, speaking today, this is Brycie Repphun, and I'm so happy to be joined today by a very special guest speaker of ours, Kimberly Mashburn from the Hartford.
Thanks, Brycie. I'm happy to be here and looking forward to the webinar today.
Okay, and we're just working through a little bit of glitches here, and we're back online. Thanks, everyone. First thing we want to do is just cover a few housekeeping items. First of all, for those of you who are seeking SHRM or HRCI credits, you'll want to be sure that you are logged in under your own name and that you stay for the whole webinar, which you'll want to do because you're not going to want to miss a second. And also wanted to let you know that we welcome your questions. We hope we get a lot of them. We are asking that you submit your questions via the GoToMeeting. And if we have time at the end of the webinar, we will be addressing some of your questions. But what we can promise you is that we will be following up with all of the attendees of today's webinar with a full Q&A. So please feel free to submit your questions. They will be addressed even if it's following the webinar. Kimberly, why don't you tell us what we will be discussing today?
Thanks, Brycie. So today we're going to do introductions of Brycie and I, even though you've already heard a little bit from us. We're going to look at how we got here, paid leave in the United States. And then we're going to look at the regulatory landscape and then how some companies have responded. We're going to look at 2 surveys and then do some specifics about 3 companies and how they implemented their paid family leave programs. So I'm Kimberly Mashburn. You can see my smiling face there. I'm currently with the Hartford, and my role, in addition to being the National Accounts Practice Lead, is that I serve as the absence, disability, and wellness expert for the Hartford. Brycie?
Just a special shout out to Kimberly. You can tell by her Southern Belle accent. She's joining us all the way from the South today in Portland, Oregon, and her and I thought it would be really nice if we could be in the same room. And so we're joining you today kind of news desk style here in Portland, Oregon. This again is Brycie Repphun. I've spent my career focused on several aspects of absence and disability management. I work in the Partners Group's total absence management practice as an account executive, where I act as the organization's technical expert on federal, state, and municipal regulations and employer policies governing employee time off. So basically, I'm TPG's chief LOA and ADA nerd. I'm going to tell you a little bit more about the Partners Group, but before I do that, I would like to send a special thank you out to the Partners Group's customers who are joining us today. We really appreciate your support and want to thank you for being with us. For over 35 years, the Partners Group has supported our customers by providing consulting services in 4 main areas, and that would include our Employee Benefits Division, Retirement and Investment Services, Commercial and Individual Insurance, and our Business Consulting, which is our Data Analytics Division. Within our Employee Benefits Division is our Health and Productivity Department, which houses our total absence management practice. Just a few more details about our total absence management practice. It's made up of myself, Patty Boris, and Jean Shearer, who are both joining us today. So thank you, ladies, for being with us also. And the work that we do in total absence management is focused on taking our clients through discussions and processes that help them identify opportunities to strengthen their existing absence management programs and also to add innovative enhancements and creative solutions. So we lead our customers to their desired outcomes by helping them build the business case for change. This slide highlights examples of the work that we are completing for our customers on a daily basis.
I hope that everyone has heard of the Hartford. The Hartford is one of the largest and oldest insurance companies in the United States. We provide absence management services, disability, life insurance, group employee benefits, automotive, homeowners, business insurance, and a variety of voluntary benefits for our employer clients. We're very proud that we've been named one of the world's most ethical companies by Ethisphere in 2017 for the 9th time. We're also the second largest leave management carrier by number of employees covered. And then you can see that we're very strong in terms of our financial strengths. One of the things that we really embody is our ability philosophy. And therefore, the Hartford is proud to be the founding sponsor of the U.S. Paralympics. We focus on what people can do, not what they can't. And you can see by the pictures here of the various Paralympians that they really inspire us with everything that they're able to do. And I hope that you've been watching some of the Olympics that have been recently on, and will watch the upcoming Winter Olympics in 2018. So let's get started with our content. How did we get here? For today's discussion, we're not going to be talking about paid sick leave legislation, although I know that is hot on everybody's list right now, and perhaps, Brycie, we may consider a future webinar to talk about paid sick leave. Today we're really going to be focused on paid family leave. So let's define it a little bit. Paid family care leave, that term refers to paid leave to care for a family member as defined by policy. It typically refers to family members, spouse, domestic partner, etc., although it may apply to grandparents, grandchildren, in-laws, depending upon the specific policy and, as you'll see, the specific state. Paid family leave also in some areas may include domestic abuse, stalking responses, as well as military family leave, such as exigency. Paid parental leave for new moms, new dads, adoptive parents, and then a primary caregiver leave for the family member, guardian, people who have self-identified as the person who takes primary responsibility for a child, and then a contingent caregiver, someone who also supports or partners with the primary caregiver to care for a child. So Brycie, let's look at the history. Oh, sorry. So I missed one here. I apologize for that. So according to the Boston Consulting Group 2017 study on why paid leave is good for business, you can see that the United States, with that big goose egg zero there, is just one of 8 countries with no national policy that mandates maternity leave for workers. The other countries that you see that do not provide that are Papua New Guinea, Suriname, 5 Pacific Island nations. So you see that we've been pretty far behind. Look at Canada and Norway and some of those other countries. Now we'll move on to the history.
All right, so while we are still well behind some of our other nations around the world, I put a timeline together so that you could see, the efforts. There have been efforts made in the U.S. to have some sort of a federally regulated program. And those efforts are continuing to increase, especially in recent days. So just so you're aware of where these efforts started globally, in the 1800s, when Europe was in the midst of the Industrial Revolution, that's where we really first saw on a global level programs being put together to ensure that protections were out there for working mothers who were transitioning from the home to the factory. The first efforts in the U.S. happened in 1919, and so followed by a lot of bullets of some attempts but failures. We see it in the 1940s is when America hopped on board with some of the state-mandated disability provisions, and then we go into 1963 with President Kennedy, who recommended paid maternity leave. So didn't quite work out for Kennedy, and then we jump forward to 2015. Where we see federal contractors getting mandated paid sick leave, which would cover both their own illness and illnesses of a family member. And I think that it's important to note that a lot of the paid sick leave provisions that are coming out from states and municipalities are covering not only employees' own illness, and in many instances, it's also covering those incidental absences related to an illness of a family member. So that's just one example where we can see the regulations are shifting. We are getting closer to some protection for care of family members. In 2015, we saw the Healthy Families Act introduced to provide up to 7 days of job-protected paid leave for care of a family member. That one didn't quite make it, but then when we're looking at 2016, we now have the Family Act, and as well as a bill introduced by President Trump's administration, and we'll get into more details on both of those pieces, but those pieces are still alive right now in the legislature. So I want to cover just briefly with you why this is such a hot topic today, and I think that really this topic has been growing in popularity because there's just more conversations being had around this. The topic of paid parental leave and paid family leave was pretty hot in our recent presidential election. And during that time, there was a lot more focus put on the fact that America truly is one of the only developed nations out there that doesn't have some sort of mandate to protect us when we need to take time off to care for our families. And I would really like to think that America is, more set up than a nation like Papua New Guinea to provide some sort of protection to our citizens. And so, as we're looking at the diverse workforce that we are today, employees are also expressing the need for flexibility. We've got dual income households. As you can see below, among women with children under the age of 18, more than 70% are now in the workforce, compared to just 50% in the mid-1970s. So there's really the need to have some sort of a protection in place because both parents are now out there working. In addition to that, we've got the sandwich generation in our workforce now, where we've got parents of small children who also may need time off to care for their aging and ailing parents. And so to provide employees with what they need, businesses are now starting to kind of take up the call because we're not getting the support from the federal legislature, and provide these types of benefits to their employees, not only to meet their needs, but importantly, just to put these programs out as attraction and retention strategies for their employees.
And Brycie, weren't you shocked to learn that 25% of new moms actually go back to work in the United States 2 weeks after they gave birth? It's amazing to me that new moms are forced because of income to go back to work.
Right.
So now let's take a look. What's happening with our regulators? As you probably know, there are 5 states who have passed and mandated paid family leave, and those include California, and we'll take a little deeper dive into California. It's always interesting to take a deeper dive into California legislation. We'll talk a little bit then about what's happening in Washington State. It's pretty interesting. Most of these programs are only funded by employee contributions, and Washington State is the first state to legislate that employers also have to pony up for paid family leave. Then we'll also look at New York. New Jersey, Rhode Island are also have mandated family leave. We won't cover them in detail today, nor Washington, D.C. and Puerto Rico, who also cover that. So we'll take a deeper dive now. Okay, so California. California was the first state, I know everybody's surprised at that, to mandate paid family leave. That was back in 2004. And then Governor Brown expanded the program in 2016, and we'll talk about what that meant, and those programs will be effective in 2018. Currently, in the state of California, there are 18.1 million people covered by paid family leave. It includes all private sector, some public sector employees that are paid $300 in wages during their base period are eligible. What it does cover is bonding with a new child, care for a family member, or an employee's own illness or injury. And interestingly, 90% of claims in California for paid family leave were to care for a new child. Only 10% were for care of a family member. You can see who's covered there. The duration right now is 6 weeks for the family care, 52 weeks for the employee's own disability. And the benefit amount currently is 55%. And then effective 2018, it will depend on the individual's income with a maximum of $11.73 per week. So you can see that, by putting that into effect, there's going to be more money put into the program and more payout starting 2018. The other interesting thing, of course, about the state of California is San Francisco has also passed legislation, the PPLO, which is the Paid Parental Leave Ordinance, which is a supplement, which actually tops up employees to 100% paid for 6 weeks for parental leave. All right, let's look at what's happened in Washington State. So Washington State has been trying to pass paid family leave for a number of years. They actually got started in 2007, but there wasn't any way to fund that. So finally, just this month, July the 5th, actually, everything was passed for the 2019 will become the premiums, and then the benefits will begin in 2020. And as I said, you know, it was really a compromise between parties. So the House vote was 65 to 29. The Senate vote was 37 to 12. So it did pass. And the most interesting thing about Washington State is that it's funded both by the employee and the employer. So starting 1/1/19, the payroll deduction will come out of the employee's paycheck at 62.5%. The employer will contribute 37.5%. And again, you can see it's the same as California, except that they did add exigency, meaning, you know, helping a service member get out on their way to active duty. The benefit amount is fairly similar. It's a little more complicated than that. The payments are going to be capped starting out at $1,000 a week. And then to give you an example, an employee making $50,000 a year would pay about $2.42 per week. For the benefits, the employer would pay $1.42, and the weekly benefit would be about $703.
So Kimberly, what do you think? I think Washington's important because they have benefits that far exceed anything that we've seen. And I'll be curious to see if other states are able to match that or attempt to top it up. It's just going to be interesting to see how this plays out with such generous benefits being offered from the state.
Absolutely, to see whether or not there's enough funding or whether or not they have to ask for more contributions from both sides. It'll also be really interesting as other states pass whether or not they do require employers to also contribute.
And that's the way that we see other nations doing it across the globe. And in a lot of them, employees understand that part of the responsibility for funding these programs is on them, and they're expected to contribute.
Let's talk a minute about New York. In 2016, Governor Cuomo signed the strongest and most comprehensive paid family leave policy. Starting in January of 2018, employees will have 8 weeks of pay, and then 10 weeks by 2021, they'll be up to 12 weeks of paid leave. So again, this program will start in January of 2018. It's taken a while to get all of this passed. There's been a lot of back and forth trying to get this program put into place. It's real similar to the covered reasons that we just talked about for the state of Washington and for those that are covered. The maximum benefit, though, in New York will be 50% of the worker's average weekly, not to exceed 50%. And so that amounts now to 0.126% contribution by the employee. And right now, the average weekly wage is capped at $1,305.92, which equates to a fairly reasonable amount for employees who need this service. Obviously, other states are going to follow suit. So you can see that 14 other states have already proposed legislation on paid family leave. You see all of those states listed there. 2 states already have specific legislation getting ready to pass on paid maternity leave, paternity leave, which are South Dakota and Arkansas. And then 6 additional states have expanded FMLA. It's unpaid, but they've expanded the job protection. 2 states have put some money into place to fund a study, and that's Iowa and Indiana. And so they're looking at the feasibility of providing paid family leave in their states. So Brycie, let's dig into this and talk a little bit more in detail about how companies are going to respond to these state mandates.
Right. So here's where this onslaught of, state mandated, municipal mandated ordinances have gotten us. So here we're all sitting with our HR hats on, trying to design policies that are consistent across the organization because we realize the importance and the value of doing that. And then we just keep seeing these mandates pop up. Maybe you've got 3 employees in California, now you have to handle their paid sick leave and paid family leave differently, and well, maybe there's one of them in San Francisco and you have to do something different for them. And for any of you that have employees in more than one state, we're all just kind of pulling our hair out at this point. So we wanted to take kind of a deeper dive into a couple of studies that have been done very recently in how employers are responding in this environment. So we'll be talking about a study put out by the Boston Consulting Group on why paid family leave is good for business. So we know you're all looking at this not only because we all know that there is an eventuality that you'll have to provide something for some or all of your employees, but the Boston Consulting Group study helps us understand why this is actually good for our organizations. This study was based on an examination of policies for more than 250 companies and then in-depth interviews that they had with 25 HR leaders at very large organizations and with the representatives of business groups and other stakeholders. We're also going to take a look at a very recent survey. Survey results were just released, what was it, Kimberly, a couple of months ago?
Yes. The data was from 2016.
Yes. That DMEC did. It was a pulse survey that involved 320 total employer respondents, and that included organizations of all shapes and sizes, so to speak. We're going to start by looking at the Boston Consulting Group study on why paid family leave is good for business. So basically what this study tells us, which we've already kind of covered here today, is that we've got a long way to go. We've got 14% of the U.S. workforce covered by some sort of employer-sponsored paid family leave program, and we haven't yet quite seen that dial turn up. So we've got about 3 percentage points of an increase from plans from 2010 to now. But I'm really expecting, because we're just having so much dialogue about this topic, that we're going to see an increase in the growth of employers offering this type of benefit. Right now, workers in the highest income quartile are 3.5 times more likely to have access to paid family leave than lower income earners. And I think that speaks a lot about the types of industries that kind of pioneered this effort. So you're seeing a lot in the high tech and professional services to be the first ones offering paid parental and paid family leave programs. And then coverage is 3 times greater among full-time workers than part-time workers. So we're not quite there with fully inclusive programs, but we are getting there. So we've got a push to offer paid family leave in more diverse industries, as well as an expansion of these programs in industries that already have them established. And so where paid family leave started in industries with high wage earners and small candidate pools like technology firms, professional, or maybe legal services, financial services, we're now seeing more programs pop up in industries with lower average wages like manufacturing, food services, and retail. We're going to be covering in detail some of the kind of the hot off the press programs that companies have just introduced a little bit later on today. And so we're also seeing a trend in industries that have long had these policies in place enriching their benefits by either maybe starting to cover hourly workers, adding a pay component to something that was previously unpaid, or providing equal amounts of leave to the primary and secondary caregiver. And we've got Facebook listed as an example here, and they announced recently that they will be expanding their parental leave to include family care. We'll also be talking about Microsoft, who just very recently expanded their parental leave to cover family care as well. So Facebook is now covering up to 20 days of bereavement leave, so that's a really unique benefit that we've seen out there very recently, and up to 3 days of paid family leave to help out with a short-term illness, as well as 6 weeks to care for an ill family member. So some recent, an example of some recent expansion that we've seen there.
And I think, Brycie, we had an employer that wanted some information recently on what people were doing when somebody miscarried. There's these expansive benefits for women who have maternity leave with some of these companies, but if a woman happens to lose a child, they really get 3 days of bereavement typically, if that. So it's exciting that Facebook is taking a stand on bereavement, really understanding that for a lot of reasons people need that time off to grieve.
Right, and we're starting to see that in the states too. I mean, Illinois just very recently passed a mandate to provide bereavement time for parents grieving for lost children. So we are starting to see that come out. All right, and then the study really goes in depth on why these programs are benefiting employers. So I would highly encourage you to take a look at this Boston Consulting Group study. If you feel strongly that it's time to implement a paid family leave program in your organization, but you need a little bit of support or you need some ideas on how to make the business case to your leadership, this study goes very in-depth on how other organizations were able to do that. And some of the reasons that these programs have been successful for employees who have implemented them is that, number one, they have had very positive effects on boosting employee retention, reducing turnover costs, and helping to diversify company leadership teams. When we talk about diversifying leadership, what's really happening there is that when an employee steps out for a little bit to take the time that they need to care for a new child or an ill family member, that's allowing other employees in the organization an opportunity to step up and kind of prove their worth. So it's really helping to identify strong leaders in the organization where we didn't have those opportunities before. In industries where paid family leave is uncommon, it's serving as a differentiator for attracting talent. So we're definitely seeing employers making the initiative to broaden their benefits offerings with paid family leave programs. And then we have programs helping to enforce a company's stated commitment to its employees. So they're using this again as a way to showcase their corporate values and show employees that they are supported, which is leading to that improved employee morale, increased engagement, and increased productivity. Companies included in this study who have implemented paid family leave programs are reporting no negative effect to the organization's bottom line. So they're not seeing an impact to that bottom line. And I think the primary reasons for that is, yes, there is going to be a cost to your organization for implementing this benefit, but you're going to see decreases in costs of your recruitment and training of new hires, because this really is helping employee retention. You're also going to see decreases in the cost of lost productivity. Again, employees are happier, they feel that their needs are being met, they feel valued, and they want to work harder for you because they feel that value. So we're going to start, if you are thinking of implementing a program in your organization, I recommend that you take an approach where you start thinking from the 50,000-foot level. And so when you're designing your programs, think about the big picture initiatives first. What are you really looking to achieve? What are your goals and strategy? Write this down, put a goal together, and then make sure that when you're putting the provisions of your plan together, those provisions are helping you meet your goal. So here's the 5 kind of big picture items that you want to be thinking about. And the first one is that your policy should reflect the company's values. So think of a way to tie this back to the values of your organization, and that's going to set you up for a really positive change management initiative as well when you go to communicate this new benefit out to your organization. And second thing is, in addition to the amount of leave you make available, consider some creativity in your program. While this is still new out there, we are seeing a lot of organizations implement these types of programs, so you want to be thinking about a way to make yours unique and attractive to potential employees. Third thing is show the commitment of your company leadership, ensuring that they're encouraging employees to utilize your paid family leave program. So use your leadership to help get the word out. And another thing that this is going to help combat is the stigma, especially in our male population, that sometimes exists. Even though these programs are available, they may not feel comfortable taking that benefit because of the stigma around, mothers are the caretakers, and and so we want to make sure that leadership is on board to encourage the utilization by all employees that are eligible. Next, you'll want to ensure that the proper support is in place for those individuals on leave. So we'd hate to have somebody take the time they need, come back, and nobody's done their work for them when they're gone. So making sure that you're giving other employees opportunities to show their worth, helping your employee who's on leave out while they're gone, and completing some of that work. And then track closely the information that is going to help you measure the success of your paid family leave program. So make sure that you are benchmarking this program. Keep track of your utilization data, your employee replacement costs, your retention rates among employees, so you can actually see how this is motivating your employees to stay with you longer, and the employee perceptions of the program. So don't forget to check the pulse of your employee population after you initiate these programs, because what this is going to allow you to do is to tweak your program, make it more effective as time goes on. And now we're going to get a little bit deeper into the nitty-gritty. So when you're really looking to design your programs, what are the questions that you should be asking yourself? First one is, are your benefits required to run concurrently with FMLA or other job protected leave? So making sure that the benefits that you're putting in place are complementing federal and state regulations and any other policies that you may already have in place. Is the benefit for continuous leave only, or are you going to offer it on an intermittent basis? I know that, my tune on this issue has changed just a little bit. I always communicated a best practice, probably even a couple of years ago, that, FMLA doesn't require us to provide bonding leave on an intermittent basis. Take the rights that FMLA gives to you. But now with this push to provide greater benefits to our employees so that they can be with their families, this is something that you may want to consider in allowing a little bit of flexibility, especially for new parents who are returning to the workplace. What are the minimum time increments that you're going to allow for use of this paid family leave benefit? Are you going to allow it to be used for those incidental absences, or do you want to encourage employees to really take the time that they need? And so that you want to make sure that you can communicate that this is a benefit to be taken maybe in a 2-week increments to be sure that employees are taking the time to be with their family. Are you going to require an elimination period? So the next, this one and the following two are kind of those inclusion factors. How inclusive do you want this program to be? Do you want to make it immediately available to new hires, or do you want to make sure that employees are putting in a little bit of time before they can access these benefits and really getting a good grasp on your organization and through that new hire period? What job categories are eligible for benefits? Are you going to be able to offer this company-wide? Do you want to start it as a pilot first and see how it goes, measure the results, and then consider expanding it to the rest of your organization? Should we provide this benefit for both genders equally? And so this is where you're, again, looking at some of those inclusion factors. Should variable length of leave caps be provided? So we've seen a lot of programs that have different amounts of time off for bonding versus care of a family member. So you'll want to consider those pieces as well. And are you coordinating this benefit with other benefits that you're offering? So one of the big questions out there for employers that are offering paid leave to new moms is, are we going to coordinate that with the short-term disability benefit that they already receive? So maybe you provide 66% income to recover from the delivery of a child. So are you topping that up with your paid family leave benefit, or do you just want to say, we're providing all new moms with 100%, and those funds are coming from our paid family leave bank? So funding is another consideration that you're definitely going to want to think through. And then how will these benefits be administered? Are you going to have a team internally that's administering this for you? Are you going to partner with a carrier or a third-party administrator that's going to help you do this for your employees? And then you'll want to make sure that you, especially if you're going to be working with an outsourced carrier, that you take the time to implement this successfully with your carrier.
And I always say no program can really be outsourced. It's always a partnership between the employer and the partner that they choose, be it a carrier or a third-party administrator, to really make sure that the employee programs are being followed and that everybody is communicating. It's really important to do that, and also to make sure that this is also integrated with the ADA and the accommodation policies.
All right, and what the Boston Consulting Group survey tells us is that there isn't a whole lot of consistency out there. The one consistent piece is that we're starting to see these programs in place more and more, but everybody's doing something a little bit different. So while the International Labor Organization recommends 14 to 18 weeks off for new moms, employers kind of run the gamut on providing anywhere between 6 weeks to, I've heard of some employers providing up to a year for paid parental leave. And then you've got the American Academy of Pediatrics is recommending 6 to 9 months of leave to bond with a new child. The interesting thing about that is that research is actually showing us that a new parent's ability to spend time with their newborn has measurable positive impacts on a child's learning and development. I'm going to toss it over to Kimberly now to go into a deeper dive on the DMEC Pulse Survey.
Great. So thank you, Brycie. So again, this survey was conducted in 2016, but I'd like to tell you first a little bit about DMEC, just in case you're not familiar with that organization. So DMEC is the Disability Management Employer Coalition, and they've been in existence for 25 years. There's 700 member companies, and about 306, I think, or 360 of those actually responded to the survey. The website, if you want to go there, is dmec.org. The annual conference is coming up July 31st in Anaheim. It's not too late for you to register and go. The DMEC provides all kinds of articles on absence management, disability, workforce productivity. There's 2 conferences a year, one that focuses just on compliance, ADA, FMLA, paid leave. Webinars such as this, the DMEC sponsors, great opportunities for networking, and they've just launched a certification program, Certified Leave Manager, a CLM. So run out to, after this, don't wait till after this webinar, and go out to the dmec.org website and take a look. Here's the results, interesting results that came out of this survey. So you can see that a large majority, well, half, are not providing any paid parental leave benefits. 42.9% are providing a leave benefit only for the biological parent, 40% for adoptive, 26.6% for foster, and then other leaves, probably to care for family members. If you go down to the little pie chart below, employers that were responding under the yes that they provide the benefits, they provide the parental leave 75.2% for both parents, 9.7% for the mother only, and then 1.4% for the primary caregiver only. Let's go on to the next. We talked about this other survey in terms of requiring time. So the employers who answered the DMEC survey, 43% do require that all the leave is used in one block time, although 46%, a larger percentage, allow more flexible scheduling and intermittent time. 63% provide the same benefit to both of the parents, and 37% provide more benefit to the mother. The pie chart again, do you have established time frames? So when are the parents allowed to take this time off? 34% require that it be taken immediately following the birth. That's 34.3%. But some are more flexible, 46.3% just require within the first year. A small majority, or a small percentage, 7.5%, require it within the first 180 days, and even smaller within the first 90 days after the birth of a child. And then again, that question of how many weeks do you provide, and you can see on that graph it's pretty spread out, with the majority giving 5 to 6 weeks of paid parental leave, only 1 to 2 weeks at 34.6%, a larger 9 to 12 weeks, 22%, and then on from there. Unlimited is 1.6%, which I think is really interesting that employers responded that they provide unlimited parental leave. And for those who are not currently providing a paid leave program, the DMEC asked, well, when do you plan to do that? And you can see that nearly 20% said they needed to do that this year. They plan to put that into place. So they have action going on to provide that service, 32% next year, and then a 3.5 strategy going forward. So now let's dive into 3 companies and look specifically at how they put programs into place and what they're offering. Brycie, you want to start with Starbucks?
Yes. So Kimberly and I recently had the ability to attend a DMEC chapter meeting in Seattle, and we're lucky enough to be able to listen to a presentation that Starbucks did. They have not even implemented their program yet. They're well on their way with an effective date of 10/1. But they were able to kind of walk us through the philosophy of how they put that program together. So we all are well aware that Starbucks is everywhere, with 7,000 U.S. stores operated by 180,000 employees in the U.S. And what we took away from that presentation was that their partner feedback was essential in designing the paid parental leave policy that they put into place. So what they started with was going out, taking the pulse of their employees, and what they ended up with was a greater parental leave benefit that they are providing to their non-store members, because what they heard was that the store members wanted something a little bit different. So while they're still able to access unpaid parental leave, Starbucks is investing a little bit more in the education of its store members. So just an example of why it's a great idea if you're thinking of putting this into place to get your employees involved. Not only is that going to help in your grassroots efforts, but then you're going to make sure that what you're putting out there is something that is really going to add value to your employees. Starbucks has their paid parental leave policy for all eligible U.S. partners effective on 10/1/17. So coming right up here, that's going to be offered to all benefits eligible partners working at least 20 hours per week. So they were even able to offer this benefit to their part-time crew. The benefit for birth moms is going to be 6 to 8 weeks of paid leave at 100%, and that funding is coming entirely from their paid parental leave program, whereas before they had a 66% short-term disability type of income replacement. The second piece is that the unpaid maternity leave is being offered to new moms 2 weeks prior to the due date. So this is kind of one of those exercises in innovation and flexibility that Starbucks decided to offer to their employees, where a new mom can start her leave early with no, medical necessity, simply just to plan for the coming of the new child. And then we have new parents, including spouses and domestic partners, are going to be eligible for 12 weeks of leave for bonding with their new child, whether that be for birth, adoption, or foster care. And this is where we're going to see the pay offered for the non-store partners and unpaid leave offered to store partners. And then some of the careful considerations that Starbucks made when they were designing their program was they wanted to, of course, focus on what was best for their partners and what was going to provide the greatest benefit to their employee population, which in the end meant that they were going to do something a little bit different for their non-store employees. How to coordinate a consistent message between leave and benefits teams. So they've got a few different hands in the pot as far as how this program is going to be administered, and they wanted to make sure that that message was consistent among their internal teams. Looping in key stakeholders, they went a long way in making sure that they had leadership involved, that they have leaders focused on kind of popping this program and letting employees know that this is something that they're excited about. And then they talked a lot about how much advance notice did they want to provide to their employees. So, we've seen this happen a couple of different ways. Either a company will announce this way in advance so that employees have time to plan, or they'll do kind of a just-in-time announcement with a quick effective date. Starbucks decided to announce this in advance, and to help combat some of the feelings of negativity that this can cause from employees who are either on leave or very recently on leave, Starbucks has put out a lot of flexible options to those employees who were either just very recently on leave, are on leave right now, or will be on leave when this provision goes into place. And then moving on to Microsoft, so I was, this webinar that we're on today was already well on its way to in the works when Microsoft announced their program. This just recently came out. They already had a paid parental benefit in place, but they've now expanded to this program to be more of a full paid family leave benefit. Microsoft has 121,000 employees worldwide, and so this is really a global initiative for them, impacting employers or employees across the globe, not just employees in the U.S. And the kind of expansion of this program really stemmed, or was in part stemmed by the fact that the Chief People Officer at Microsoft had kind of endured her own struggles with an illness in her life, and was so grateful that her family members were able to be there for her in her time of need, that she really wanted to champion this effort at Microsoft. So where we land is a paid family caregiver leave policy being implemented globally. So we're starting to see this impacting more and more employees of Microsoft. And in the U.S., this was effective just on June 27th here. And this allows up to 4 weeks of fully paid leave and 8 weeks of additional unpaid leave to care for an immediate family member with a serious health condition. And they did decide to coordinate this benefit with the definition of family member under the FMLA. So currently there's 22 countries onboarded, and this benefit is now available in the U.S. effective in June, and then they're slowly kind of onboarding this to the rest of their employee populations around the globe.
So let's talk about my favorite store, Nordstrom, who you all know is a major retailer. 72,500 employees. They have 354 stores in 40 U.S. states and also in Canada. The way that they made changes to their existing policy was they got a lot of feedback and solicited feedback from their employees to find out what they liked about the program, what they didn't like about the program, and Nordstrom came back with a very, very generous program for parental leave. So Nordstrom has expanded their parental leave program, which was effective May the 1st of this year. The employees must have worked for at least 180 days prior to the date of birth or placement of a new child. And you can imagine, why they went with that 180 days. Otherwise, they would be known as the maternity employer of choice, right? Where people could come on board and then immediately get 12 weeks of fully paid leave. So when you look at your policies, you may want to consider that too as you hire people, whether or not you're going to require that someone be on board for a period of time before these benefits are paid. Or you may use it as a recruitment and retention strategy as part of your strategy. But what Nordstrom did was they provide 12 weeks of fully paid leave, 12 full weeks, 6 weeks of enhanced maternity pay that they coordinate with their short-term disability plan, and then 6 weeks of 100% paid bonding leave. For other new parents, they get 6 weeks of fully paid bonding time for either the birth, adoption, or foster care. So those are, just 3 companies. Would love when you respond back to us via your questions. If you have a program in place, we'd love to know what you're doing. So Brycie, what else do we want to do? We have about 7 minutes left. I think we covered more material than we thought we would ever get through today, didn't we?
I want to just take a moment and reflect on where we think we're headed from here. So I think we're going to see more employers putting this into place. I would hope that we see support from the federal government to on every state and municipal level so that we don't have all these different programs running around that we need to coordinate with. And then I'm going to be really interested to see what happens with the whole primary versus secondary caregiver. I think that's an interesting topic, and I think, you know, I'm looking back to the EEOC's guidance on maternity, which, you know, of course is geared towards new mom, but some of the guidance they provided in there was that they're going to be looking to make sure that dads are getting equal benefits that are provided to moms. So I think we need to stop and think really consider, you know, are we able to provide the same amount of leave to our secondary caregivers that we're providing to our primary caregivers? And I'm interested to see the stance that the EEOC takes on some of those carve-outs.
Yes, I'm anxious to hear about that too. So we'll keep following what the legislators are doing and follow these states. Anxious to see the surveys that they come out with in those two states. One inquiry was whether or not the folks who attend this webinar will be able to get a copy of the deck. And yes, we will make the material available to you. Trying to see if there's any more questions that anybody has. So we have a few minutes left if anybody wants to submit a question. And again, if your questions aren't able to be answered here, we welcome you to email Brycie. We'll respond to your questions and get them out to those of you who participated in the webinar.
Yes, and so all of the attendees today are going to be getting a follow-up email from the partners group with directions on how to access the presentation and then the Q&A from the session. And then I think that we're going to give you the gift of a little bit of time back in your day. We really so much appreciate you taking some time with us. Again, we welcome your feedback and your questions and hope to see some of you at that upcoming DMEC conference in Anaheim.
Thanks so much, everybody. Have a great afternoon.